Good afternoon, everyone. Phil Simons here with Columbia Grain and your monthly USDA supply and demand report recap. Well, the cat is out of the bag. We looked at the monthly supply and demand numbers for a moment and quickly turned our attention back to watching the headlines on the latest developments on the Russian and Ukraine conflict. Futures have definitely taken a bit of a breather on the wheat side of the floor as we have gone straight up over the last week and a half now. We are starting to see some backfilling action on the charts to a certain degree. Now, we need to remember that there are fundamental traders and factors, and there are also technical traders and factors that drive the futures prices. Fundamental factors focus on aspects like supply and demand, weather, logistics, world price competitiveness, and more importantly right now, our politics. There are also the technical factors, things like moving averages, relative strength indexes, Bollinger Bands, Fibonacci studies, something called a Mariposa, stochastics indicators, and the list goes on and on and on. But it also includes things like gaps and gaps on charts. Now, the reason that I want to bring this up is because if we look at the Chicago May wheat futures chart right now, this has created a lot of gaps over the last week. Currently, the lowest gap on the Chicago May wheat futures chart is all the way down at $9.84, which is $2.17 lower from where we are currently at. I'm only pointing this out because the technical traders, remember the guys that look primarily at charts, will always view gaps as something that needs to be filled at some point in time, meaning that the price will need to go back to $9.84 at some point in time. And this will become a chart objective, just like the chart objective that we took out last week of 2008, of the 2008 high that we saw at 1334. Now, this was a chart objective that was taken out again last week. Now, it did take 14 years to do so, but it did make that chart objective. So again, just something that I did want to point out in the fact that the technical traders will be looking at a lot of these gaps as something that will need to be filled at some point in time. But let's take a look at the latest round of S&Ds from the USDA and what they told us this morning. So let's start out with the US ending stocks and what the estimates came in at. So US ending stocks for corn on the left side of the screen, we see the number coming in at 1.44 billion bushels. Now, this was slightly below the average trade estimate and below the February number, which was 1.54 billion bushels, but still well above last year's number, which was 1.235 billion bushels. And on the right-hand side of the screen now, if we look at the US ending stocks for soybeans, this number came in at 285 million bushels this morning. Again, well below the February number of 325 million bushels, but above the average trade estimate and well above last year's number, which was 257 million bushels. If we take a look at US ending stocks for wheat, we can see that number came in at 653 million bushels, which was up from both the February number of 648 and the average trade estimate, which was 633 million bushels. But again, well under the 845 million bushels from last year. Let's switch gears real quickly and just look at the world ending stocks now. We can take a look on the left side of the screen and see this morning we have world corn ending stocks coming in at 301 million metric tons, which was slightly above the average trade estimate of 299 and above last year's number of 292 million metric tons. On the right-hand side of the screen, we can see that beans came in at 90 million metric tons here this morning, which was slightly above the average trade estimate, but again, 2.8 million metric tons lower than the February number and 10 million metric tons lower than last year's number that we can see on the screen here. World wheat came in at 281.5 million metric tons, which again is roughly 3 million metric tons higher than both the average trade estimate pre-report and the February number, but again, 8 million metric tons lower than last year's number of 289 million metric tons. Real quick, let's look at the South American production. We see Argentina corn this morning coming in at 53 million metric tons on the left-hand side of the screen. which is really kind of splitting the difference between the average trade estimate and the February number. Along with beans on the right-hand side of the screen, we can see that that number came in at 43.5 million metric tons. Again, kind of splitting the difference between the average trade estimate and last month's numbers. Brazil soybean production, on the right-hand side of the screen, we can see actually the USDA lowering the number that they had last month, bringing the March number down to 127 million metric tons, which is much more in line with the CONAB numbers from last month as well. So good to see, the USDA reporting numbers a little bit closer to what the market is really anticipating to see there. We can also see on the left-hand side of the screen, the Brazil corn production. The numbers this morning came in at 114 million metric tons. And again, pretty well in line with the average trade estimates, along with the February numbers. But overall, we really did this morning, we quickly examined the latest S&D numbers, but the attention is moving right back to watching the headlines that could potentially jolt the market. Now, the wheat markets, they were limit down at last glance, and again, could be really viewed as bound and determined to fill some of these gaps that are out there. So be sure to get your orders out there and continue to work to take advantage of this massive price volatility that we're seeing. And just remember that the market is not logical, it is psychological. Have a great rest of your week, everyone, and we'll talk with you later.